Hello everybody and welcome back to the Fintech Times. We're here at Sibos Europe 2022, which is in Amsterdam, the Netherlands. And I'm very fortunate to be joined now by James Bryce-Lind of Minna Technologies. James, how are you?
Tyler, I'm good. It's great to see you again and the team.
Yes. Well, you were with us in Fintech Week London a couple of months ago. And yeah, it's great to be back. It's great to be back with you here in front of our cameras and all of our equipment. And yeah, going to be talking about subscription services today, alongside some other of the most, emerging trends. But before we get on to that conversation, why don't we give our viewers a little chance just to get to know you better? If they missed you at Fintech Week London, why don't you tell us a bit more about yourself?
Sounds good, thanks. So my name's James Bryce-Lind. I head up sales for Minna Technologies in the UK. We're an embedded finance solution that sells a subscription management product to banks and fintechs that allows their consumers to manage their discretionary subscriptions directly from their banking app. So if you can imagine a user going through their banking details and seeing a Netflix or a Spotify or any of the thousands of global merchants that we work with, we offer the ability to directly manage that within the app. And that's not just cancelling it directly with the merchant, but it's also performing other cool actions like pause it or upgrade or downgrade the solution or the offering. So it's really interesting to have joined Minna at such a inflection point with subscription management, because it really is just so interesting what's going on at the moment.
Yeah. It's interesting that you mentioned that inflection point, because according to Gartner, 3/4 of B2C companies will be offering subscription services by 2023. And that is actually is forecast to push the market to the $1.8 trillion mark by 2025, which isn't too long away. And as you mentioned, you managed to join Minna at a very sort of pivotal time for these, not only for these services, but also for your companies, as you outlined in your introduction. I'm just, in that light, maybe we should just start by discussing what the current market trends look like and where you see the market going.
Yeah, for sure. So like you accurately pointed out, by next year, the term 2023, I remember when that came out a few years ago, that was, a few years to get there. So essentially, in the next few months, we're going to hit that 75% of B2C solutions will offer a subscription option, which is pretty wild. Subscriptions, by virtue of their nature, are meant to simplify things for consumers. If you want to get your TV on demand, let's just say HBO, you can access all of that content without having to buy it individually. So a subscription in its nature is meant to simplify things. But unfortunately, simplicity sometimes leads to apathy. And particularly in the current environment, with the rising cost of living, apathy has a big cost for the consumer. So some of the trends that we see here is that over the last 6 months, we've seen a material increase in cancellations. We're looking in the double digits in percentage growth. In fact, I believe 58% of consumers are reviewing their subscriptions right now with the rising cost of living through independent research that we've done. And a large percentage, I believe about 80% of those, will be looking to take an action on managing those, whether it's cancelling it or moving to a freemium option. So I think there's a confluence of two big trends here. The first one is the saturation of subscriptions currently. And the second is, with the rising cost of living, that call to action point. And in that, we see two trends right now. First of all, is subscription management is a big in-demand feature. A Forrester report pointed to that being a top 3 in-demand banking feature. The second is, what is subscription management, right? And for us, we can define it as self-service within a banking app, removing the largest friction in managing subscriptions, which is actually getting to the page where you can make the management action. So that's one of the bigger trends. The subsequent trend towards that is not just what's happening right now with subscription management, which is like tightening the purse strings, closing off any subscriptions you might not be getting the most out of. The most interesting thing is, what does the next generation look like? Now, we have research that indicates that consumers are looking for more than just cancellation. They're looking to downgrade, like I mentioned, pause, or even acquire new subscriptions, or in some circumstances, be offered a retention offer from the merchant, maybe 3 months free to retain the customer. So that's where we're seeing the market move towards. You could look at that as maybe a second generation or a furthering of the subscription management solutions that people are becoming more and more familiar with.
You've raised some really, really good points there, James, and I think we should definitely discuss how it works in terms of the rising cost of living and inflation, of course, and everything that you mentioned there. But what I would be really interested to touch upon is that we've obviously seen a huge rise in embedded finance products, in innovation, and especially in terms of the demographics of users. Looking at that sort of rise in those three, how are banks managing to attract more customers through the use of partnerships?
It's a really interesting question. So it all comes down to what all of the digital bank teams are looking at within the banks, which is, what are the features that consumers want? How can we help capture more of a consumer's daily activities around managing their finances? And there's some incredible things being done with some of our partners like Tink and the personal financial management space, or with some of our innovative partners like Lloyd's, who have standalone areas in their app which will allow consumers to see what they're spending on subscriptions and actively manage them from there. So there's some really cool stuff being done in the partnership space, because frankly, banks don't have the capacity or the expertise to be able to build their own standalone solutions for some of these things. So that's where partnership comes in. It's the classic build versus buy question. And how quickly can a bank get to servicing the relevant needs of their consumers? Quite often, the answer is through partnerships.
Yeah, we've. I think this is something we touched upon before in our previous conversation. Is sort of the power of fintech partnerships and everything they're able to achieve. But in terms of just going back to when you were talking about the trends, you mentioned about how subscription services are behaving among the rising cost of living. So, we talked about sort of a record. Even beyond our own newspaper, you see headlines of record cancellations of Netflix services, of subscription services, as people's budgets are spread out more thinly, right? So where does Minna come into that to help your customers retain their customers?
Yeah, it's a great question. So when you look at retention, you look at essentially what would happen in a situation where there's an adverse event for a consumer and their banking relationship. Is a consumer trying to cancel or stop a payment, and can that be done easily enough for them? In a worst case scenario, if a bank isn't set up to be able to facilitate that relevant need, which is of course made more important right now in the current rising cost of living, then you're going to see an adverse effect on the relationship. You're going to see a decrease in Net Promoter Score. You're going to see the bank, the consumer thinking, oh, well, if they can't do this, what banks can? The question arises, is the grass greener with other banks? And the most amazing thing about the UK, and a key reason why I moved over here a few years ago, was that the neobank category is exceptionally well developed, and they're hungry for new customers. But more importantly, they're hungry to be the primary bank. That's really where the next battleground is going to be, and you can see it with some of the primary neobanks like Starling starting to offer those key products like mortgages. That's a real sign that the market is maturing. By the time that Revolut gets their banking license, there are really going to be shivers down the back of the bank's spines, and you can see that in the demographics. The fact is, the trend is moving towards older people moving towards neobanks and younger people being digital native. So as they start to capture that salary payment, which is the classic definition of a primary bank, that's when the big shivers go up the bank's spine. You know, more recently, I think one of the most telling things to me was by one of the primary high street banks in the UK. They asked about how can this feature being used for customer acquisition. It's the first time I've ever heard a high street bank say the word acquisition, and I've been trying to sell for them for a while.
Yeah, you raised a really good point there. I don't think, I think that's quite a new area of the market in terms of, you speak about this move to more digitally friendly banks, especially within the UK. It's vibrant neobank community. What role do you see these banks, and perhaps as the fintechs as well, what role do you see this community playing in the future of commerce? Like how we transact, how we receive payments, how we pay for goods. What's their role in the future of that?
It's really interesting. I think when you look at that, you have to look to the next generation of subscription management, which is not just managing the existing subscriptions, but can banks be used as an acquisition channel? It's a conversation that we're having with a number of banks, and something really interesting, because what that's doing is actually leaning on Minna's unique position in the market as creating that one infrastructure point for not just the consumers but also the banks and the merchants internally. The old adage, it's our flywheel. So in building those direct merchant relationships and being integrated with the banks, offering a consumer service, we're in the perfect position to create a marketplace. So that's acquiring new. That's creating a new avenue for merchants to acquire new customers through the banking channel. It's also giving the option for the banks to further embed or further ring fence that customer relationship by aggregating all of the subscriptions into their bank account. So when you apply that old term, share of wallet or top of wallet, being able to acquire subscriptions, which is the holy grail right now in the full service of subscription management and acquisition. Getting to that point is a race in which we're very much a part of, and something we find extremely interesting about the next generation.
Of course, yes. And in terms of the next generation, and we've spoken a lot about innovation and the pace of development within the industry. Do you ever see subscription management services interacting specifically with any other forms of fintech that you can think of?
I do. It's probably I would say widely known, but to be honest, I'm not widely known, so I don't think it would be. But I'm quite a big open banking enthusiast, and one of the biggest changes that we're going to see as a financial ecosystem globally is a move towards open banking payment networks, specifically VRPs. So there is a world in which our unique position sitting between the merchants and the financial institutions can facilitate and expedite that migration over to open banking rails. But I think that's still quite a long way away, and something which we're always open to exploring, but not an immediate opportunity for us.
Yes, it's on the horizon at least, which is really, really positive. I mean, you mentioned that you were really big into open banking. How do you see open banking having a major influence on things like financial inclusion and fintech for good?
Yeah, I mean, fintech for good is such a nice phrase, isn't it? I think it's sort of like when someone says sustainability, everyone feels a little bit more calm and a little bit better about themselves, right? I think when you're looking at financial inclusion, you've got to look to things like open banking, being able to increase lending capacity for lenders by servicing people who don't necessarily have a traditional credit reference agency score. To me, that's probably one of the most archaic parts of the financial system, right? I've been doing a bit of research into the space more recently, and I think there's some really interesting dynamics happening around the open banking space, but also the open transactional space around how innovative financial products like buy now, pay later can be used to help with financial inclusion. So it's a really interesting space at the moment, but open banking definitely set the standard for being more inclusive. Whether you're young, and thin file, whether you're a migrant or an expat, or you simply just don't have a credit score. It allows consumers to have a bridge towards the broader financial community, which is a nice thing. Yeah. Fintech for good.
Fintech for good.
Fintech for good.
Nice. I should start my day with a Fintech for good question from now on, I think.
Yeah. What is it when you wake up and look in the mirror and it's like positive affirmation or whatever it is, manifesting, all of that sort of stuff?
I always try and sort of like scratch to the bottom of it, you know, like get below the surface of Fintech for good, and there's a lot of people doing a lot of good things. I saw outside there are a few sustainable finance companies which were really interesting to speak to whilst we're here. And speaking of our time at Sibos, I mean, what are you looking to take away from your attendance here?
Yeah, probably some close relationships with some key banking stakeholders would be my number one.
Sounds good.
But to be honest, it's a great opportunity to just broaden the network and talk to some of the big global institutions that are helping to shape not just the banking industry, but the fintech industry. I think this is one of the first, I believe this is the first Sibos in about 3 years.
Yeah.
So there's a lot of relationships to be bedded down here, a lot of new face-to-face relationships to be built, as well as your general activities and fun, because let's face it, we are in Amsterdam and it's one of the best cities in the world.
It's fantastic.
So, combining all of those things, like attending fantastic dinners at the Waldorf, for instance.
Oh yeah, why not?
Yeah, very fun.
Oh well, fantastic. It looks like you have quite the program ahead of you, and we won't take any more of your time, James.
No problems.
It's been a real pleasure to speak to you today, James Bryce-Lind from Minna Technologies, and we hope to catch up with you again soon.
Great to see you, Tyler.
Thank you.